Hey everyone, Karan here from Life Accounting, where we help you save on taxes and increase your wealth. And today I want to tell you about the proposed tax change that may negatively affect current and future unrealized capital gains. It involves the IRS taxing the gains on investments before you even sell them. We're going over everything you need to know, including who is affected by this, so be sure to like this video and leave a comment below to let me know what you think about the new proposal. Let's get right into it. For background information, we know that the IRS believes they lose about $400 billion to $1 trillion in unpaid taxes every single year. When you combine that with the government running out of money to fulfill its own financial obligations because our government spends more than it brings in through taxes and other revenue. In President Biden's trillion-dollar infrastructure bill, it appears that the U.S. government needs more money, and it appears that their plan to get paid involves collecting more taxes. So far, they've laid out a number of plans to make their tax dreams come true, including monitoring bank accounts, increasing the capital gains tax rate, removing the step-up basis, getting rid of the 1031 exchange, and now taxing the money you haven't made yet by taxing unrealized capital gains. Earlier this year, Janet Yellen, the Treasury Secretary in the Joe Biden administration, proposed taxing unrealized capital gains as one of the ways to fund Biden's plans, and recently doubled down on that by saying that unrealized capital gains are income. For now, though, let's talk about how this would affect you. Currently, when you sell capital assets like a stock, a business, a rental property, cars, collectibles, or another form of investment, you pay taxes on the profit you make, also known as your realized capital gain. Now, what Yellen is proposing and continues to discuss is that investors pay a tax on the increase of, say, a stock every single year, even if you don't sell the stock. For example, under the new proposal, if a stock goes from $50 to $100 in a year, you will have to pay taxes on that $50 increase, even though you have not sold it and profits have not been realized. So this leaves us with a few questions that still need to be answered. Like, what happens to unrealized losses? Contrary to popular belief, stocks don't only go up, they also go down. And under a proposal where unrealized gains are taxed, one could also assume that unrealized losses can be written off. Another question that will need to be answered is what other things, if any, trigger a taxable event before they are sold. When the value of a rental property increases, will taxes be owed on that? What about the value of used cars? They just went up. Will taxes be owed on those as well? And what about the value change in a business? How about future Social Security benefits? And the biggest question of them all is how the IRS plans to regulate and enforce taxation on unrealized gains. We are already seeing delays in refunds, delays in advance checks, and a slowdown in audits by the agency. So it'll be interesting to see how they navigate through a complex model of valuing unsold assets. Now, who does this affect? In its current form, the proposal is only targeted towards billionaires, though it has the possibility to have negative effects for every investor if sentiment towards investing turns negative, basically making it less attractive to be an investor. And some believe that this is just a start to more taxation for everyone, despite Biden's attempt to increase taxation only for the rich. But the Biden administration has noted at least 3 loopholes they want to solve with this proposal. The first loophole is that realized capital gains are taxed at lower rates than earned income. And so even when wealthy investors pay taxes on their gains, they pay at lower rates than everyday working people. The second loophole is that wealthy people often borrow against their assets to pay for their lifestyle without ever selling, which allows them to accumulate massive amounts of wealth without paying taxes on that wealth. And the third loophole is that when an asset owner dies, their unrealized capital gains are exempt from taxation when passed down to their heirs, something called the step-up basis. So what do you think about the proposal to tax unrealized capital gains? Comment below and let me know your thoughts. And if you're interested in learning how the Biden tax plan could affect every American, watch Sherman's amazing breakdown next. I'm Karan from Life Accounting, and I'll see you in the next video.